interviewed by UN experts for the first time in the current crisis. And the White House dismisses North Korea's warning that it could preemptively strike US forces as nothing new. Bush's statement coming just minutes after the closing bell on Wall Street. Indices had spent most of the session in the red, with some traders noting that selling picked up pace on news of the US president's speech. The Dow hit lows not seen since last October, losing 56 points to close for a second session in a row below the key 8,000 level at 79.29. The S&P 500 index falling 0.6%, ending trade at 838. Nasdaq, the only one of the three majors in the green, but only barely there. Look at that, just about a quarter of a point up at 1301. Markets returned it to you, Bernie. You were on this story, what, 2-3 days ago? You were talking about Richard Lee being in London, hanging on to the story like a baby with a new rattle, nice shiny rattle, and you wouldn't let go. That's an interesting one.
I admit, I have joined the ranks of the paparazzi, I'm afraid to say.
Poor Richard. All right, everyone, we're going to take a quick break right now. It's still ahead on Squawk Box. Despite the overall weakness on the Hang Seng, Hong Kong-listed China shares have shown some solid gains so far this year. Is it too late for you, the investor, to profit? Philip Chan, the research director at Shenwan Securities, shares with us his strategies for the red chip plays.
Eunice Yoon, the face of business news on CNBC Asia.
Ahead of the Lunar New Year rally, Hong Kong-listed China stocks, or H shares as they're called, enjoyed their traditional seasonal rally. Some analysts, though, think the H-share index is not done yet with its gains. So, if you are sour on Hong Kong, take a look at this chart if you can. This is the H-share index up 13.3% this year. It certainly looks a lot prettier than the Hang Seng. That is down 195 points on the year, 2.1% lower. Philip Chan is one of those who likes where H shares are and where they're going. Philip is the research director at Shenwan Securities. He joins us now over in our Hong Kong studios. Philip, thank you for being with us this morning. Let me first ask you this. What is different right now from the times when everyone would get so gung-ho about the red chips, they would plow into the stocks, they would drive the valuations up hard and fast, and then immediately crack the rally? What's different now?
Yeah, in fact, if you go back, if you take that chart back a little bit further to the end of October, you can see that the H shares actually started, the H share index started to rally from then. So they've actually had quite a good run, from then since about 3 months ago. What's different now is that the fundamentals on the H shares are better than they were 2 years ago, and for the most part, and the quality of the investors is better. In the rally that we had the beginning of last year, sorry, in the beginning of 2001, that was mainly driven by speculative retail money, some of it coming from China as well. This year it's a little bit different. Those investors are still there, but they, the sort of corporate money as well is actually driving the H share market as well.
That's very interesting then. Yeah. So you don't just have the retail punters in, you actually have institutional money going into this market as well. Let me ask you this. I mean, we have seen days where Tsingtao Brewery was up 15%. Yeah. In one day. I mean, some of these stocks are up 40–50%, in the matter of, what, 8 weeks or so. Surely that's overkill.
It would be overkill on some of the stocks. That's why I was going to come to the point that you still have to be selective in these kind of stocks. If you look at the best performers since the beginning of the year, most of them are the third line, second line H share stocks, smaller caps, which you would expect because these are the low, the sort of lower quality ones. But the big cap ones, the institutional plays have lagged that rise since the beginning of the year. We would expect that to change a little over the coming weeks as we get to reporting season.
Okay, change in terms of what? Because at this time last year, you know, the hot topic, the flavor of the season with everybody was textile plays, you know, because of the way the books were. I mean, backlog of orders. I mean, they wouldn't be able to take new orders for a year and a half, something like that. A lot of those were Hong Kong listed, right? I mean, like Tex Wink, companies like that, UU and Industrial. This time around, I mean, looking at the ones you want to highlight, we're talking very basic industry, like Ma On Shan Iron and Steel, refineries, Sinopec, Shanghai Petro. What's the rationale there?
Yeah, I mean, China is basic industries. That's what you have to focus on when you look at China. These are, I mean, again, the stocks that we're sort of highlighting here, they're cyclical businesses in cyclical industries. The cycles for these stocks in the petrochemicals, they're actually getting stronger. They have been for these last couple of years. Steel prices have been rising in China because of the boom in the construction. We expect that these stocks to continue to perform well. Steel companies in general, petrochemicals. However, on the petrochemicals, we would still look more at the most specialized petrochemical stocks, the two you've mentioned, as opposed to the sort of like holding company type ones like Sinopec or PetroChina.
Philip, can I ask you this? Refining margins tend to do well when oil prices are high. If the Middle East crisis is resolved, there's a fair number of people out there who think that oil prices are going to sink by at the very least $10 per barrel. There are also signs that a glut is building. Now, are these companies that you've mentioned isolated, protected in any way from that?
I mean, they cannot be completely protected, but for instance, you know, Zhenhai Refining we've mentioned, it's considered a world-class type of refiner. It's a pure refiner as well in China. They have long experience in dealing with the volatility of the world oil market. So I think there's a certain level of management expertise there to manage this business. So it cannot be fully protected, of course, but I think they have the expertise to ride through that.
Okay, Philip, but before I let you go, I need to get some disclosure from you. Do you own any of the stocks that you've mentioned this morning? Do you have any investment relationships with these companies?
No, I don't have any investments in these stocks. Our firm was the original financial advisor to two of the companies that you mentioned.
All right. Thank you very much, Philip, for being with us this morning. Philip Chan is a research director at Shenwan Securities. Quick break, and then Mark Laudy joins us with the regular e-market update. He's got some details on a couple of people who have been arrested in Britain for spreading a computer virus. Someone's nabbed the bad guys. Keep it here on Squawk, everyone.